So, you're thinking about getting into short-term rentals. You've got these visions of 5-star reviews, a calendar that's just booked solid. But what if I told you the single most important skill for success isn't your eye for design, but how good you are at research? Today, we're building the investment blueprint. This is what separates a profitable business from a really, really expensive hobby. Let's get to it. Man, this quote really says it all, doesn't it? It's just so easy to get swept up in the fun part, picking out the furniture, planning the welcome basket. But the reality is the game is often won or lost before you even sign the papers. If you pick the wrong market or the wrong street, no amount of fancy decor is going to save you. This early analysis, this is where the real work is done. I think we can all see a little bit of ourselves in the emotional host, right? You visit a city, you fall in love with a cute little house, and your gut just screams, this is the one. But the pros, they operate like the data-driven analyst. They're looking right past that gut feeling and straight at the facts. The goal isn't to kill the emotion, but to make sure it's backed up by cold, hard numbers. That's the mindset shift we're making today. Okay, first things first. We got to start with the big picture. Before we even think about zooming in on a specific property, we have to know if the entire city or region is even a smart bet. We're on the hunt for what we call macro signals. So, what exactly makes a market strong? Well, think of it like a four-legged stool. You need healthy demand. Are people actually coming to this place? You need reasonable supply. Is it already oversaturated with listings? You absolutely need manageable regulations so you don't get shut down a year from now. And you need strong infrastructure to get people in and out easily. If any one of those legs is wobbly, the whole investment could collapse. So, how do you actually check for these things? Honestly, you have to become a bit of a detective. Start digging. Are you seeing news that the local airport is adding new flights? Is a huge new company or a convention center being built? Are the local city council meetings talking about new friendly laws for STRs? These are the clues, the breadcrumbs that tell you if a market is growing or shrinking. This is our foundation. Okay, so let's say the macro signals look good. The market's a go. The next step is where a lot of people just get completely overwhelmed. You open up one of these data tools and bam, it's just a wall of numbers, charts, and graphs. So the question is, what actually matters? What are the handful of metrics that tell you the real story? It really boils down to just these four. Occupancy rate, pretty simple. How often is it booked? Average daily rate, or ADR, what's the average price per night? RevPAR basically combines those two. But the most important one on this list by far is your comp set. These are the specific individual properties that you are actually competing against. We need to know how they're doing, not the entire city. And this right here, this is probably the single biggest mistake new investors make. Just look at the massive difference between the market average and your comp set. If you based your financial projections on that big vague average number, you'd be setting yourself up for failure. You have to compare apples to apples. Your 2-bedroom with a hot tub is not competing with the studio apartment downtown. Nailing your comp set is absolutely everything. All right, so we've gone from the 30,000-foot view of the city down to the nitty-gritty data. Now, it's time to put our boots on the ground, so to speak. We're zooming in from the city level right down to the neighborhood because this is where you actually find your competitive edge. This is such a critical idea to understand. You aren't buying a property in Nashville or Scottsdale. You're buying a property on one specific street. And being just a couple blocks away from a popular trail versus being next to a noisy highway can make a gigantic difference in your income. The pros live and die by this level of detail. So, how do you find that street-level edge? Here's a pro tip. Become an expert on your direct competitors. Go read their 3-star reviews. What are guests always complaining about? The coffee was awful. There was nowhere to park. The Wi-Fi was slow. Every single complaint is a golden opportunity for you. If all your comps have a basic coffee pot, you can be the one with the awesome espresso machine and great beans. That's how you win. Okay, we've done the high-level market research. We've spied on the competition. But all of that is totally meaningless if the numbers don't work. Now we get to the bottom line, the money. Does this still actually make financial sense? First up, you have to nail down your startup costs, or what we call CapEx. This is all the money you have to spend before that first guest ever walks through the door. We're talking furniture, linens, kitchen supplies, a photographer, permits. You need a rock-solid budget for this from day one. And then you have your monthly operating costs, your OpEx. These are the bills that show up every single month like clockwork, whether you have guests or not. This is your mortgage or rent, your utilities, internet, cleaning, software, supplies. This is the number your revenue has to beat every month just to stay in business. And once you know your startup and monthly costs, you can figure out maybe the single most important number in this entire blueprint, your break-even occupancy. This tells you the exact percentage of nights you need to be booked just to cover your costs. If your break-even is, say, 70%, but your research shows the comps are only getting 60%, that is a massive red flag telling you to run, not walk away from that deal. And it's truly wild how quickly these operating costs can add up. Of course, the mortgage or rent is the huge slice of the pie, but platform fees, cleaning, and utilities can easily eat up another 30 or 40% of your gross revenue. You have to know where every single dollar is going. So here we are. We've looked at the big picture. We've crunched the numbers on our comps. We've analyzed the competition. We've built a full financial model. It all comes down to this one final critical step, making the call. Is it a go or a no-go? So, how do you make this huge decision without letting your emotions hijack the process? Well, the pros use a simple tool often called a decision matrix. Think of it like a scorecard for the investment. It forces you to be objective and rate all the factors we've been talking about: demand, competition, regulations, financials, to get one final data-driven score. Let's see how this works. You decide how important each factor is to you. Maybe market demand is the most critical, so you give it a weight of, say, 40%. Then, based on all your research, you score it from 1 to 5. You just go down the list, and at the end, the math gives you a clear answer. It takes all the guesswork and emotion out of it and lets your own data make the decision for you. And that brings us right to the end, and maybe the hardest part of all. You've done all the work. You've built the blueprint. The plan is solid. The real question is, are you disciplined enough to follow it? Because the real test comes when you find a property you absolutely love, but the blueprint, the data, is telling you to walk away. Having the discipline to trust your research over your gut, that is the ultimate key to success in this business.